All right. Really quick breakdown before I go to bed. And I'll break down GBP USD using the Robin Trap strategy, right? And let's get down to business, right? So monthly, remember my monthly lines are they'll be pink, right? Weekly lines are they'll be purple. Daily lines is they'll be yellow. Orange, right? 4 hour line is they'll be blue, and my 1 hour is that'll be red. If I use the 1 hour, mainly I just use my Fibonacci on that point. Main placement that I'd be using my Fibonacci and really actually placing it is on my 1 hour, right? The monthly, if I just want to get what kind of price we're at or anything like that, or the weekly, yeah, I can do that. But the main thing about the 4 hour, from 4 hour to the monthly, which is our four horsemen, right? Monthly, weekly, daily, and 4 hour. I want to see, mainly want to get the direction, right? The direction. What direction is the market going, and where I need to be trading in what direction, and not the opposite at all on the 1 hour, right? And what I'll be doing is all about the 1 hour execution, 1 hour entry, 1 hour stop loss, 1 hour take profit, right? Let's get it. All right. So monthly is down structure. Why is that? Well, first off, to prove it, if I go back to 2022, 2002, we went up, down, down, down. And then we have this is the lowest point, right? From that low, what's the last two candle formation, right? It's like two candle formation. When I say two candle formation, I mean, what's the last opposite? So if we're going down, then if you're going down, you want to see the two candle formation be blue, so which is bullish, right? If you're going up, you want to see the last two candles be yellow, which is down, right? So from this low, what's the last two up candles that are together, right? Basically together. What I mean is side by side. They're really together. It's really that simple. Don't overcomplicate this shit. This is a doji, right? And it's to see these numbers, you gotta use these numbers. These are this is the nerd number one tool I use too. You have the O for open, H for high, L for low, and C for close, right? And then this is the current price that that is at, right? Um, for this one, the lowest point on the chart is the last three digits, right? From this low is 595, right? So that's where you want to put that line, 595. You can actually fix it up there. If it's not five, boom. And now it's fixed to the T, right? From here, this is the last two candle formation. And I'll zoom in this area right here. Last two candles that is together, blue, that we bump into first, going, this way, right? You're not looking at anything else. You're looking for the first one we run into. First come, first serve, right? And now from this left one to the one closest to the left, what's the highest point going to the right? Highest point is this wick right here, and that is 505. Mark that down, 505. Boom, set. Voila, you just did your monthly structure, and now we're down structure, right? So down structure on the monthly, go to the weekly, start from the low, same low as the monthly, right? But you see, you bump into from this low to the left. You bump into first? That's blue by itself, right? Not by itself. Like base by itself, not by itself. You have two candles right here. This is the closest one to the left. This is the highest point. Remember, this is all irrelevant at that point in time. So this is the break of structure point. Clearly broke structure here. Then we came down, went up a little bit, didn't continue there, came down, right? We're still in up structure. So it lifts up, and then break structure here, following along, because there's many opportunities here. And then we have this low right here, right? Which brings us to the purple line, which is the weekly, right? With that chart we're on. And it's the weekly low. The last two candle formation that we bump into first. This is still close to the left. Well, to the right is the highest point. Boom. So we're down structure on the weekly. So down structure on the monthly and down structure on the weekly. Go to the daily, right? Go to the daily. You don't have to go, start at the, you don't have to start at the monthly. You start at the weekly low, right? The weekly low is down here. So from the daily, which is our orange line, right? What to the left is the last two bullish candles we bump into first. Buy, sell, buy, sell, buy, sell. Two candles together. This one's close to the left. What's the highest point? Here. There's no other candles at all to the right. Boom. And that's your structure there on the daily. Go to the 4 hour. 4 hour, so we got monthly, weekly, and daily saying down structure, right? Now I only need three of the four horsemen, right? Only need three of the four horsemen to agree, right? Once I got that agreement, no question about it, I'm looking to go down only. If I get two against two, that's a pause, and I don't do nothing until I get three, right? So I get three working together. That means I just got to be a break of structure at some point, or a continue. It has to be a break of structure somewhere in whatever time frame it is. Boom. Then we get it busy, but we got to make sure the 4 hour has another job too as well, not just being a four horseman, but it has a job of being our scope. Our scope is the direction where we want to aim in of the four horsemen's direction, right? So say we got monthly, weekly, and daily going down, which we do. But say, we have the 4 hour right now going down too as well. But what if you say that 4 hour was up structure? What I would now have to do is wait for the 4 hour to break structure down and then take action on the 1 hour, right? If I don't have that scenario right here in this case, I have the direction is going in the same direction as the four horsemen. That means all four horsemen are saying down, right? That's great. Go to the 1 hour now, and this is where the action starts. Now, as you can see here, I have written, I'm waiting for a 23.6 pullback. Then I'll be risking 0.5 to make 1%. What I mean by that, so I had this, down, when we're down on the 1 hour, right? We had this win right here. I was not involved with this win. That's another thing. I'm not, the key thing that makes the Robin trap strategy work so well, right? I use past data, right? I don't delete anything on my charts. I keep my wins, my losses, everything there, so I can have it as data, right? That's all about so I can get the probability game factor. on if this trade, yeah, this trade is in the right direction, but is this trade win, has a high chance of winning. That's the key thing. So I had a win here. I have two, one, two, three, and relevance. And relevance, that means that thing didn't hit the negative, didn't hit the negative 27 right here, which is my entry, right? And if it doesn't hit it and it hits that yellow instead, it's irrelevant, and I just delete that setup. So I deleted a setup here, deleted a setup here, deleted a setup here. And then I finally took this setup, and then I end up losing. It went in profit a little bit, and then came back, came to the stop out area, and lost that trade. And then I lost this trade, right? And then after I get two losses in a row, after a win, I'll put that thing on pause. I wait for four losses and to get back active, or I wait for another win, right? So I had three, and then I was waiting for a four, but we got another win here. So this win activated without me, and it won, right? Okay, great. Now I have another opportunity, just like this case scenario. I had a win here, and I don't count these. And I have two losses side by side, right? Okay, so what's our probabilities that we're gonna get the same thing? Probably a little lower now, right? Because market doesn't like, yeah, it does the same thing sometimes, but it doesn't. It like to switch it up. So I'm what I'm predicting is the next two valid trades. If I don't get on this valid trade or the next two ones, right, this will be a winner somewhere. So I'll be risking 0.5% on this one, this next one, this setup right here. And then if I lose this one, I'll be risking 1% to make 2% to make it back. And if I lose that one, okay, I put on pause, wait for four losses. So I wait for two more losses. And then after I get the two more losses, then we can, take the next fall instead of risking 0.5 first. If I, but if I get a big win, okay, I'll be risking 2% to make uh 2% to make 4%. If I lose that one, that'll be 2.5% to make 5%, and then that'll be the cutoff. Right? A lot there, right? So I waited for a 23.6 retracement. So after this win, once the trade wins, it's time to get active. It's time to get busy, right? Hold on, let me stop. Let me do some fresh for you. So in this case, say none of this happened yet, right? This win. So I would do a Fibonacci here. I will be waiting for the next candle to come up to the 23.6 retracement without going past the 0 point, and it didn't do that. So what I do next is pull it down, and then each candle is representing an hour, so I gotta wait an hour for this thing to close, right? And then I want to wait another hour to see what happens here, and then of course came down to here, came down to here, came down to here. Then we finally have this point, which is the lowest point, is 521. 521. All right. And boom, there we go. There we have it, right? Let me expand that. All right. So what I do next, right? Same thing. Wait for it to pull back. So this candle finally finished. Once that candle finally finished, all these candles are fresh game to that 23. So we didn't surpass the 0 point again, like we did on these setups right here. These candles right here. We have a nice pullback to the 23.6 retracement, and that's when things get active and busy, right? This is where you want to plant your trade. So boom, 966. Now you use the Fibonacci correctly. These lines will tell you. So if I want to, place a mark here, this is the number that I need to place. My entry is to be this number. My TP is to be this number. My stop loss is to be this number. It's already in place. And this is just, what I'm doing here. why I'm setting up here, because I want to get a certain measurement, right? From this to this one to this one. I want a precise measurement. So we got 95 pips, right? And then from this, you get my little stop out area. So this, as long as price stays within this range over here and don't go surpassing past this level, then I'll not be deleted. If it hits this level right here, I'll be deleting my entry down here, right? But if it comes down, obviously it's I'll enter the trade, and then without go buy a year on that. But this setup, so I know I have an alert here. Always set an alert here. I want to have, so it's not real stop out for me. And I'll say delete Robin trap now. Right? And that's only if I touch that line. So that's always really good reason to set alerts. Right? Now I pull this thing down to here for 38. Got that. Now I'll take another one. Right? And this will be my actual entry is right here. Oh, there. I'm just copying all the numbers, right? I'm copying all the numbers. Okay, this is already set. Boom. And then I have that. There you have it. My setup, right? The Robin trap. The Robin trap is this right here. This is the decoy setup, right? Robin trap setup is this. I have a win right next to it. Always best to take these setups with a win next to it, or for at least 4 losses in a row, right? And this is where set my pending order. Put in the entry pending order here. My target put in here. Stop loss put in here, and then I'll just be chilling, right? I chill, and then I'll go, chill, stare at another chart. My job here is done, right? Until we get active here, and then every now and then I check to see if we're active. Yeah, you can set alert here if you want. If you want to be alerted if you got tagged in, or just have this alert. And of course, if I get this alert, what we do to this, we delete, right? And then this becomes an irrelevant, and then I just lock it up and I keep it marked up as an irrelevant. But if it comes down to here, we gotta see if it's hit like all these like you see on my chart, right? Are trades that hit the 23, the negative 27, but didn't come back to the 0 point, and it hit the negative 78.6, right? That's it, right? So there you have it. That's the setup, nice and clean from very beginning to now, right? And I do that on everything. The way I explain it, I do it on every single pair. Every single pair I take. This one, waiting for a 4-hour break of structure, and then I'll be risking that 0 point, right? This one, I'm waiting for 2 L's and only, right? So I'm waiting for this thing to come down, get active, and I want to see this thing lose, right? Yes, I wait for the losses. I wait for the loss, especially if I'm winning too much in a row, which I did here. Won at least like you win 3 in a row on one pair. There needs to be a cool off. You gotta wait. I want to see that thing lose. Once I see it loses 2 times in a row, then we get active and busy. That's simple. All right. Deuces.